Welcome to this video, Wednesday, 10th of August, and it is, 3:30 p.m. GMT. What I want to do today is talk about one of the most important lessons that any trader can learn in terms of making money from the markets, and that's understanding the probability of what the market expects against the expected payoff. If you don't understand it, you need to, because you'll never make money unless you can. Now, in terms of expected payoffs, I've covered it in another video before, I think a few weeks back. Not many people saw that video, so I'm going to cover it again. I had a lot of people write to me and say over the last week you put up a lot of trades online and you're very specific about what you want to do in terms of your entry, stop and target and giving it to people. Aren't you worried about being wrong? No, because the expected payouts on our side. Yeah, we're going to basically be wrong around 50% of the time. Thankfully, the trades over the last week, you can check them in the playlist beneath, have all gone well. I want to focus on one in particular, which is GBP CHF. And someone wrote to me, so I could not see that trade going down, yet it's made 240 pips already. Now, in my view, that trade had a high probability of going higher, but there was no expected or decent expected payout in taking a long position. Better to take a short position, even if stopped out. It's only a small loss. If it comes good, it's a great profit. Now, in terms of expected value, we're going to be discussing in a little bit more detail later on. But what I want to do first of all is give you a little illustration of expected value of payoffs. It's only about 30 seconds. It's from my favourite, or one of my favourite authors about trading, which is Nassim Taleb. If you don't quite understand it, don't worry, I'll come back and explain it in a little bit more detail. Then we're going to look at GBP CHF, update the chart where we are now, again in relation to expected payoffs, and then we'll come back and sum up. So right, let's have a look at the summary from Nassim Taleb first. Pound Swiss franc daily chart. Just want to talk about getting a good expected payout. Okay, now in terms of, obviously, we did a video on this on the Bank of England day, but I just want to go through the rise up and why the expected payout is good for a short trade. Now here, rumour of Swiss National Bank intervention in Euro Swiss spills over into all other majors against the Swiss. Now, yeah, the Swiss National Bank intervention is not in GBP CHF. It's got nothing to do with the fundamentals, but prices rise and then rise again. Now, what you can keep in mind if ever you look at central bank intervention, if it's in one pair, it very often spills over into others. It's only temporary anyway, and it's less temporary in the pairs that it is not aimed at. Okay, good example of that would be when the Swiss bank, National Bank, removed the floor against the Swissy on the euro. It surged on all major pairs. At the time we were saying just buy any major pair you like against the Swissy. We picked out Japanese yen. Japanese yen went up nicely. Now we expected all of this to be retraced. Okay, obviously we run on the Swiss National Bank, and then eve of the Bank of England meeting, the market expects a hawkish BOE. Well, if they're expecting a hawkish BOE, it's in the price. How much more upside is there? With that Swiss National Bank intervention behind as well, probably not very much at all in our view. So the expected payout is on the short trade. Now, here's the day we did our video, and what we noted was we had that little spike up to make a new high, and we failed back. Okay, so there's your resistance, those two bodies in our view. Okay, we don't expect them to be taken out once we had the red candle going down, which we did, because we did our video after the Bank of England meeting. We were saying best level to come in through for us was 1 127.40. Okay, and the reason I've said 127.40, if I could get this line straight, sorry, there we go, is it's through these two candle bodies here. Buying's exhausted, the stops are getting hit, settle nicely down towards 127, go back to test the two candle bodies here, fall back, that's the end for us, and then we are going down, and you can see that we did move down quite nicely with these tails. Yeah, just there's your resistance and the top of that body there. Now, of course, if you come in at 127.40, you've got decent profit, haven't you? You've got 125, so you got 240 pips. What do? Do you take the 240 pips in, or do you let it run? Now, my own view, I'm sure regular viewers will know this, is why not take half in? You've got 240 pips already, and you can see if we run on, we've already taken out the 20-day moving average, okay? It's a big red candle. So where would you put your stop? Well, you could put it back behind here, 126.60, say, but I wouldn't go that far back, okay? I would go for the round number with these two candle bodies here, where this one pushes off. So say 126.30, that means you get 110 pips on your second trade, okay? And you got the potential for a run on, and we're already through the 20, okay? Where could we run to? Well, we thought Swiss National Bank intervention, candle would be retraced. We're nearly there, okay? But we could run on even further with all these problems in North Korea. So we might even run down towards the 123 level. My view on it would be let the second trade run, see what's happening at the end of the day. If you're not above the 20-day moving average and looking nice and weak, hold it and see if it goes down. If you get stopped out, you're going to get a really decent profit, okay? Because you've already got half in, second half, it's an okay profit. But it could turn into a really, really good profit if we run on to the downside. Obviously, see how we close up. Now, that is my review of the British Pound CHF. I just want to make a few other points in respect of expected value. So let's just sum up. We'll come back up that short summary from Nassim Taleb and also our review of GBP CHF. We'll see how that trade turns out. Now, the important point to keep in mind is the expected value of payout against risk. Markets saw high probability of the pound going up, but how much higher would it have gone? Our view is even if the Bank of England were hawkish, 100 pips at best, most of the buying was in the British pound, it was overbought. We'd have to risk probably 100 pips against our long trade. Doesn't make sense, okay? However, looking at, if the pound went down, the expected payoff was much better. You can get 3 to 1, okay, in terms of your reward over your risk. So even if we're wrong, we're trading probabilities longer term. It's not all about one single trade. We're losing half our trades, okay? Got 2s and 3 to 1s in terms of risk rewards. We're going to come out ahead, and that's what it's all about. Your trading probabilities, you need to know expected payouts. Now, I'd recommend you do your own research on this, but in terms of you've got a Forex trading strategy, make sure it's based on probabilities. I know I keep stressing this for beginners, but do not fall for these fancy patterns, okay, that you see online, like, I don't know, Elliott Wave, Gartley patterns. You can't calculate expected value of payoffs. Why? Because the Forex markets cannot be predicted. So make your strategy probability based. I mean, I've done my illustration there on, market sentiment with technicals for timing. There's plenty of different ways of trading probabilities, okay? Once you understand expected value of payouts, you never have a problem taking losses. You've got full confidence in your edge to prevail longer term. Now, I did say earlier on, over the last week and a half or so, put up plenty of trades. They've all done relatively well. Some have done very well, okay? But we know there's a drawdown coming, okay? That's the way the markets are. So you don't get too excited when you're winning. Don't get too depressed when you're losing. And incidentally, looking back on July last month, first 3 weeks of July I found horrible. They were the worst 3 weeks for a long time for us. We were getting stopped out for small losses continuously. They're only small. When the edge kicks in, the expected value of payouts, then that drawdown has now come back and we're now just touching a new high in equity. It gives you confidence, when you know probabilities, expected payouts, to stick with your strategy, trade it with discipline, not get too depressed when you're losing, and don't get too excited when you're winning. Okay, any trade can go wrong. Trade with the odds on your side, expected value of payouts on your side. You will make money trading the Forex markets longer term, which is what it's all about. Thank you for watching me as usual. Take care. Have a good day.